This is Taking Stock on Bloomberg. I'm Pim Fox. PIMCO's co-chief investment officer, Bill Gross, wrote on the company's website yesterday that the cult of the equity is dying. So is he right? Should investors really stay away from investing in stocks? Well, let's ask David Nelson. He's the chief strategist at Belpointe Asset Management. David, a pleasure. And I got to just confess, the reason that we decided to pick that song to introduce you just during the break is I got to enlighten people as to your other previous career.
You know, I'm the former lead guitarist for the Turtles, and that's one of the songs we did, and they're out on tour right now. I wish I was with them sometimes.
And instead of having to parse out the details of an FOMC meeting?
Absolutely.
All right, so the Fed comes out, and we'll get to Bill Gross and Ponzi and stocks in a second. FOMC meeting today. No more candy. Nobody gets a pony. What do you think?
I'm not surprised. I know the street and maybe even the market was looking for something today. And I think Mr. Bernanke understands that there are limits to monetary policy. And he said it. He said it many times that we have to start looking towards fiscal policy. And that means Congress and the president as we approach the fiscal cliff. So it's not all that surprising to me.
All right. What about approaching the cliff when it comes to stocks, right? You read a lot of people read Bill Gross. I mean, he runs the world's largest bond fund. PIMCO has also now moved into equity funds, right? Actively managed equity funds, picking stocks. And what did he say? That the stock market is like a Ponzi scheme.
That's what he said. And you know, I was thinking about it on the way in today. And if you think about it, the chief marketing officer at PIMCO must have had a heart attack because they're trying to build up their equity division. But I'll tell you this, you know, let me answer it this way. If stocks like Apple, Disney, Kimberly-Clark, Union Pacific, stocks that are hitting perhaps all-time highs, not 52-week highs, all-time highs, if that's part of a Ponzi scheme, then I want in. Bring it on. You know,
you like these stocks?
Of course I like these stocks. We own these stocks. And, you know, if you want to talk about Ponzi schemes, talk about something like U.S. debt or perhaps Social Security. That would make more sense. I think if Bill Gross thinks about it, it was probably an unfortunate choice of words. He's certainly a brilliant man, and much of what he said is true, but I didn't like the rhetoric so much.
Okay, let's put the rhetoric aside. When you look at these kinds of stocks right now, you say, okay, some of them are hitting, you know, all-time high, right? We're looking forward to Apple. They're going to be releasing a new phone in September, right? You know, but doesn't a stock price require that someone else buy into the story and pay more for the same thing you paid? With a bond, you supposedly have a legal contract that says, look, I'll lend you some money now, pay me some interest, and then give me back my principal at a certain date. With a stock, everyone has to start to buy into the story. I mean, they don't levitate on their own, right?
I think that's a shallow argument for the following reason. I think you could apply that really to almost any asset around the world. And certainly stocks can get overvalued, but if we go back a decade, we certainly had an overvalued market. We were certainly way, way above trend. And now stocks are reasonably priced. Now, you can make the argument that you make, you know, for a stock that doesn't pay a dividend, but you got a lot of good dividend-paying stocks, and there's a lot of free cash flow available above and beyond those dividends, then that tells me that those dividends, in fact, are going higher.
All right, but if you have investors that are psychologically predisposed to not want to own shares, it doesn't matter how well these companies do, because you're going to need someone else to buy those shares for the stock to go up, or the company has to go and buy back shares.
That's a valid argument, and right now.
All right, I'm one for two.
You're one for two, okay. But you know, we've come through a horrible decade, and we've kind of chased the retail investor away. And things like the flash crash, the high-frequency trading, these are all pretty scary things, and maybe some of this needs to be addressed. You know, for
how do you address fear in the market? How do you sort of deal with it? Because sometimes fear is an opportunity.
Fear is an opportunity sometimes, and sometimes it's a signal to do something and, in fact, get out. I think there's some real opportunities in this market right now. We are struggling with the economy. We know that, but there are things to own, in fact, in this market.
Well, interesting. Kimberly-Clark, Disney, Apple, some big names. I want to thank you very much, David
Nelson. Thanks very much for having me.
Belpointe Asset Management, always a pleasure. All right, coming up, just